Imagine you've got this secret passport. But this one doesn't dictate what countries you can visit. No, it's way more important. It dictates your financial autonomy. It literally controls whether you can get the keys to a new car, sign a lease on a great apartment, or, believe it or not, even land certain jobs. This invisible passport, it's your financial ID. Welcome to This Explainer. Today we're going to unpack exactly what this ID is, how it works, and most importantly, how you can take total control of it.
Okay, let's dive into this. Here is our roadmap for today. We'll be looking at the promise to repay, why your credit actually matters, credit cards, the good versus the bad, your financial report card, and finally, building good credit.
So, starting off with Section 1, the promise to repay. Deconstructing credit.
At its absolute core, credit is honestly just borrowing money with a promise to repay. It's that simple. When a lender evaluates you, they aren't really looking at your bank balance. What they're actually analyzing is your historical relationship with this exact promise, right? Every single time you swipe a card or take out a loan, you're putting your word on the line. And your financial ID is basically the historical record of how good your word actually is.
Moving right along to Section 2, why your credit matters. Unlocking milestones. Now, we all know that getting a car loan or a home loan or even student loans requires a credit check. That's a given. But renting an apartment? Absolutely. Landlords use this all the time to gauge tenant risk. And this brilliantly illustrates just how far-reaching this is, because surprisingly, your credit even impacts your career. Seriously, a lot of employers, especially if you're looking at finance or management roles, they check your credit history to judge your overall reliability before they even make a hiring decision. Wild, right?
Okay, let's get into Section 3, credit cards, good versus bad, the double-edged sword. So credit cards offer incredible utility, for sure. They can be absolute lifesavers in emergencies, plus they offer those really lucrative rewards programs we all love. But the dangers? They are severe. With average high interest rates often hovering way above 20%, a super small purchase can literally snowball into massive compounding debt. And that trap of minimum payments, well, it's mathematically designed to keep you paying that interest for decades. You really have to be careful.
Which brings us to Section 4, your financial report card, the scorekeeper.
So the crucial point is, imagine a really strong score, let's say 750, as a giant gauge. Every positive financial action you take pushes that needle up. But every missed payment, that drags it right back down. Lenders don't have the time, or honestly the desire, to interview you over a cup of coffee to see if you're a trustworthy person. Instead, they just look at exactly where this meter is pointing. Ultimately, what this number boils down to is a mathematical representation of your creditworthiness and your reliability as a borrower. It basically takes the highly subjective question of, hey, can I trust you with my money? And just converts it into hard objective math. And that leads us to our final section, Section 5, building good credit, the blueprint. It is quite literally the million-dollar question. How do you actually build good credit from scratch when the whole system seems kind of designed to overwhelm you? Well, the good news is the mechanics of safely building your profile are actually really straightforward. You don't need some sort of complex financial engineering here. You just need behavioral discipline. Let's look at a perfect real-world blueprint. Take the example of a student who started out with absolutely nothing and built an excellent profile using just 3 very simple steps. Step 1, making small, manageable purchases. Just buying normal, everyday groceries. Step 2, keeping balances low, like never, ever maxing out the card. And Step 3, paying that balance off in full and on time every single month consistently. Just by repeating this simple loop, they steadily pushed their score up. There are no magic tricks involved here, folks. It's just repeated, responsible behavior. So what does your financial ID actually say about you right now? Because there is a number attached to your name that's telling landlords, lenders, and employers a very specific story about your reliability. The question is it the story you want them to hear? By really respecting the double-edged sword of credit and sticking to those consistent habits we talked about, you can absolutely ensure that your financial passport unlocks every single door you want to walk through. Thanks so much for joining me for this explainer, and I'll catch you next time.